Good Monday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you. Sorry for the technical difficulty. I absolutely had to get that resolved. Don't want to be without you today. What a day! What a day! What a day it was. You know, you find a situation where you never know what the street is going to do. Saturday, the world's in a panic. The president comes out and says, "Okay, listen. Here's the situation." Iran, you've got 48 hours, meaning by 5 o'clock tonight, Monday night, to open the Strait of Hormuz. If you don't, we are going to bomb and destroy power plants, desalination, so on and so forth. Critical infrastructure buildings and structures throughout Iran. So this morning, at roughly a little after 4 o'clock, he changes his mind. And he comes out and he does a press conference. Pardon me. First of all, he did a True Social post and essentially said, look, we've been in talks with Iran over the weekend. Talks are going great. And therefore, I'm going to give Iran another 5 days because the talks are going great. And essentially, we think we're going to have this thing resolved. As you would imagine, the global markets, because you still had European markets were trading, Asian markets were closed. But the global markets, as well as our pre-market session, what did we just hear? I mean, it was the most crazy thing that I've ever seen in my life. An immediate, abrupt turnaround. We were down over about 340 points on the futures at that point. And then all of a sudden, we find ourselves up nearly 1,200 points, literally in a blink of an eye. I mean, you want to see a prime example of algorithmic trading? There it is. Here's the True Social post the president released this morning. I'm pleased to report that the United States of America and the country of Iran have had, over the last 2 days, very good and productive conversations regarding a complete and total resolution of our hostilities in the Middle East. Based on the tenure and tone of these in-depth, detailed, and constructive conversations, which will continue throughout the week, I've instructed the Department of War to postpone any and all military strikes against Iranian power plants and energy infrastructures for a 5-day period, subject to the success of the ongoing meetings and discussion. So that was a True Social post that took us from down over 300 to up over 1,000 literally in a blink of an eye in the pre-market session. Then he leaves Mar-a-Lago. He's on the tarmac, and he does a really long press briefing. And I mean, the press was this throwing one question after the other at him. He said at that press briefing that both Iran and the U.S. wish to make a deal and that the two countries are going to get together today, probably by phone. And then he went off and said, well, it has to be by phone because most of their infrastructures, meaning, internet, et cetera, is already gone and so on and so forth. So you sit back and you go, wait a minute here. Does it really end that quick? Can it end that quick? Now, within moments of that Truth Social post, Iran came out through their news agency and said, essentially, and I'm paraphrasing, we don't know what he's talking about. They basically denied the entire thing. But you know what was interesting? Wall Street didn't care about what Iran said. Wall Street cared about what our president said. And so at this phase, the market, of course, is so hungry for any type of good news. And at least on the surface, this is probably the best news that we can expect. So we find ourselves in a situation where, who do you believe? Is this just another negotiating tactic? Is this really something that's happened? This is what everybody from an institutional standpoint is looking at right now and going, wait a minute here. Can this really be happening? I mean, we've got 5,000 Marines on their way there. We had talk, of course, of so many different things, Carg Island being taken over by us. I mean, so many different things. But all of a sudden, talks occur over the weekend, and they're going to continue over through the week, and then this whole thing's going to be over? I'm going to throw out an S word to you. I'm skeptical. I'm skeptical that it can turn around that quick. Now, wars do come to an abrupt end. We know that. And we hope and pray that everything President Trump told us today is true. My fear is he may have the very best intentions, but you've got a country that has lost over 3,000 people, that is in desperate need of oil to start flowing again, which would give them an incentive to open the strait. We don't know who's in charge in Iran. The president said he doesn't really even know that Kirshner and one other guy were the ones doing all the negotiations over the weekend. He said it's not the Ayatollah's son. He goes, we don't know where he is. So really, we find ourselves in a situation where, okay, it sounds really good on the surface, but could it end that quickly? That's what I'm skeptical about. So I'll share with you when we come back from the break what this market did. Didn't close anywhere near the highs, but it was a solid day today. Oil prices plummeted, which is a great thing. But we have to ask ourselves, can it really end that quick? Let's hope so. Let's turn it over to Kristen Snow. She's in the Right Now Traffic Center. Hello, Kristen. Back to the Jon Sanchez Show on News Talk 70 KOH. Big rally in the market today. Again, a shocking rally. If you just joined us, once again, what happened is early this morning, the president posted on True Social that talks with Iran over the weekend went great. Talks are expected to continue throughout the rest of this week, and therefore he is postponing what was supposed to happen by 5 o'clock tonight, which was the destruction of infrastructures within Iran. So he's given them 5 days to basically come to the table and see what happens. Let me tell you, I'm not the only one that's skeptical, because I read, I'm going to give full credit to, there's a Bloomberg article, and I want to give credit to this gentleman that said this. Let me find his name once again. Brad Conger. He's Chief Investment Officer at Hurdle Callahan. I've never heard of them, but I think he summarized it the best. He goes, the people who are encouraged by Trump's responsiveness to the market, their faith is misplaced. He said, I'm worried that it's not Trump's decision anymore. Not in the same way that the tariffs could be called off. And that's exactly what I'm talking about as far as I'm skeptical on this situation. I hate to say this. Lord knows I want this market to calm down and oil prices to come down and lives, stop being lost and so on and so forth. But you got to think to yourselves for just a moment and go, what are we going to give Iran for them to stop firing missiles and drones and everything else? What are we going to give to Iran to allow them, quote, to open the Strait of Hormuz, meaning they're not going to fire missiles and underwater mines and so on and so forth? That's where I'm struggling, trying to figure this out and go, okay, what's in it for Iran, right? Large portion of their country has been destroyed. They've missed out on billions and billions of dollars of oil sales. That right there is the only thing that I can think would be the incentive for Iran, and that is to be able to get the oil flowing again, which, of course, is a massive incentive. But I've seen these situations before. I remember when I was a younger broker, I'd get really excited about these and believe everything that I read and heard and watched and so on and so forth. Well, tomorrow I'm going to be 62 years old, and I think I'm a little bit wiser than I was earlier in my life, as it is with many of you. So I guess what I'm saying is, be careful. If you had been on a kind of a defensive stance, don't feel like the world is leaving you. Don't get FOMO, fear of missing out. This is a time where cooler heads will prevail. And again, I hope and pray, as I know many of you do, this thing does come to an end, because some are skeptical, saying the president did this, that the talks really didn't happen with Iran, just to calm the markets down. Because I told you on Friday, I said, my guess is, and my bet is, that we were going to see $100 oil within the next couple of days, meaning Monday and Tuesday. And we actually did. We touched it very briefly. And that's why the equity markets were plummeting over 300 points until everything turned around. So I think the president and his advisors were saying, Mr. President, something needs to be done. Something needs to come out of your mouth to calm these markets down. Because, man, they had a big sell-off in the Asian markets. They had a big sell-off in the European markets before all this happened. And again, we were heading that way. But had we finished when it was all said and done? Well, again, we roughly gave up about half of the gains that we got right at the beginning, which you can't even count that, because, again, these algorithms just kicked in so rapidly. But it was a solid day. Finished up 631 on the Dow, 1.38% to a close of 46,208. NASDAQ rose 299, 1.38% to close at 21,946. S&P was up 75 points, 1.15%, closing there at 6,581. And the Russell 2000 was the best performer. It's always the most volatile on the up and the downside. Today it was up 2.29%, 56 point gain to a level of 2,494. Now, the ever so important question, oil. How did it do? It tanked, no pun intended. $9.93 loss, $88.19 a barrel. Gold prices, they fell. Gold fell $167.16. closing at $4,407.20 an ounce. And I'll tell you what was interesting. We saw bond yields come down today. Now, why is that interesting? Well, again, the bond market has not been behaving, as I've said many times on this show over the last few weeks. Bond market's not been behaving like there's a war going on, right? Normally, you would see bond prices go up, yields go down. Up until today, we've seen the opposite happen. Bond prices go down because traders didn't want to hold the bonds, fear of rising inflation because of oil. Today, they went, you know what? Let's start buying those bonds again because now oil's going to come back on board and we're not going to be at a war and on and on and on. And so they bought the bonds and that drove the yield down. So the 10-year yield today was down 6 basis points to a yield of 4.33%. So that was a good solid number. Good solid number there. Now, as you would imagine, I remember this morning, I said on one of my stock updates, I said, today was a pretty easy trade from the standpoint, everything that sold off when this war started, that first Monday after the Saturday when the missiles began flying, seemed like everything that sold off as far as the sectors and even some of the individual names, that when they sold off, those were the names that came back today. Let's go to the cruise lines. Norwegian Cruise Line up 6.23%, $1.18 rise to 2013. You had airline stocks that were strong today. You had Tesla up $12.87, 3.5%. Palantir up $10.22. Micron, that didn't participate. The semis did not do much today. Micron was down about $18.55, 4.39% loss to a price of $404.35. Again, airline strong, transportation strong, everything, of course, with the oil coming down. That's how important oil is to this global economy. Now, where does this bring us on a year-to-date basis? Now, I want to bring you up to date on this one. So for the year, after today's gains, we're down 3.9% for the year on the Dow. NASDAQ's down 3.9%. The Russell 2000 went positive, up 0.5%, and the NASDAQ is down 5.6%. So once again, we still have some damage done. As I indicated on the show on Friday, if you missed it, please pick up the podcast or the YouTube. There's been some damage done, right? We closed below the 200-day moving average on Friday. And again, major averages on a year-to-date basis, not doing too well. Matter of fact, as I went through the numbers, we were sitting between 7 to high 7% pullback range from our 52-week highs on the major averages. And remember on Friday also, the Russell 2000 went into correction territory. It was down 10% from its high. So we needed this. The bottom line, we really, really needed this today to calm things down a little bit. I love this one other comment I want to mention by a strategist at Mizuho Bank. He says, the hardest part is not predicting the war, but predicting the communication from the White House and how much markets will react to it. He said in a note to clients. He says, we're left with a market confused whether it's a credible sign of the end game nearing or another very complete, very much moment. Truth is about perception, and Trump's back and forth is creating uncertainty on top of uncertainty, which helps prevent market declines from otherwise confident bears, according to a strategist at Piper Sandler. All of this back and forth buys time and prevents overconfidence in the markets, for better or for worse. All right, you're now up to date on this crazy, crazy session. This is like something we don't really see on a Friday, but nope, it was a Monday. That's how our week's going to start. When I come back, I'm going to get down to my topic of the day. In the world of gray divorce, right? We've all heard that term, the gray divorce. Matter of fact, it's on the rise. It has been for quite some time, and I don't see, why this would change. So this, I think, today's topic is really going to apply to a lot of you that are listening. So very few documents are as critical as the Qualified Domestic Relation Order, better known as the Quadro. While the divorce decree officially ends the marriage, it is the Quadro that actually moves the money. So today, I don't like talking about this topic of divorce, but again, over 50% of marriages end in a divorce, so it's something many of you have dealt with or may deal with in the future. I want to go into, I haven't touched on this, and I don't think I've ever gone specifically on the Quadro and the impact on your retirement. Because we deal with this a lot with our clients, right? They get a divorce. Everything's fine as far as retirement. They get the divorce. The Quadro steps in. The Quadro goes, hey, guess what? You just lost that $500,000 IRA, 401k, whatever the case is, to your spouse. And it's all done under a Quadro. So it's going to be really interesting. So today I'm going to focus on understanding the Quadro and the impact on your retirement when I come back. Let's turn it over to Jim Poston. He's got news, traffic, and weather. Hello, Jimmy. The Jon Sanchez Show on News Talk 780 KOH. What a wild, wild ride it was on the street today Once again, we finished fairly decently, up 631 on the Dow, 1.38%. Nasdaq rose 299, 1.38%. Also, S&P up 75 points, about a 1.15% increase. And as I indicated during the first segment of the show, it's all about the president coming out and saying, all right, we're not going to go after the infrastructure of Iran for 5 days. So it takes us to about Friday or Saturday, depending upon whatever calendar he's going to utilize. So the street got excited about it. Again, the big move besides the equity market, oil down $9.93 to 88.19. All right. So you're up to date on the market. Now let's get to our topic. Understanding Quadro. So again, the qualified domestic relation order that occurs when you get a divorce. Now, why am I focusing on this? I hate the subject of divorce, but I see this very often with clients. And you talk about a way to derail your retirement plans, right? You could have done everything correctly, saved and kept low debt exposure, did everything correctly. And then here comes the divorce papers and you're wiped out of your retirement, or at least 50% in most cases, sometimes all. I've seen it all happen. And there's a lot of confusion of what the Quadro does and some of the rules that we have to follow, because we get, not served, but we're shown or told the Quadro order by the judge, and we have to, of course, adhere to that. So I found that a lot of people just have no idea how these things really work. So I want to take this opportunity and kind of educate you a little bit on it. So I'm going to kind of focus in, because I'm talking about, losing big chunks of money in retirement. That's generally for those of you that are probably 50 or older that have saved for many, many years in your 401k and IRAs and so on and so forth. Now, the IRA is not affected by the Quadro. That really affects your retirement plan at work. But I got a little stat for you. So I don't know if you know this or not. About 1 in 3 divorces in the U.S. now involve people age 50 or older. Pretty substantial. That's according to Wikipedia, so take that for what it's worth. But I've seen that stat everywhere else. That was just the fastest one that I could find. But here's the other one that's interesting. For second marriages, the failure rate is 60% plus. And, we've seen it. Maybe some of you have done this, married 2, married 3 times. So again, very difficult to save for retirement when you're losing money in a divorce. So what I want to kind of focus on once again is really, what is this all about, and how can we, make it and still save for our retirement if divorce is something that's going to happen? The Quadro, as I like to say, is really the only document that is standing between a comfortable retirement, which you had probably before the divorce, and a major financial setback. And what it does, of course, is it ensures that, hey, look at, in a state like Nevada, a joint tenant state, he's going to get half, she's going to get half. That's the way it works. But you got to be very, very careful of how this money is distributed. So I want to start off with, for those that are not familiar with the term, what exactly is a Quadro? So once again, a Quadro, that acronym stands for Qualified Domestic Relation Order. It's an actual court order used to divide the qualified employer-sponsored retirement plans. So when I say that, I'm talking about your 4K, profit sharing, pensions, you name it, anything that is basically through employer-sponsored type of retirement plans, most likely it's going to be impacted and affected by the Quadro. So the Quadro ensures the division complies with the federal ERISA laws. Now, what in the heck is ERISA? So those are the laws, the rules that we in the industry have to adhere to. And employers have to adhere to it if they offer a retirement plan. And ERISA stands for Employee Retirement Income Securities Act. Those are the regulations that protect both parties from an early withdrawal penalty and tax consequences. So in real life, before I get into some very nitty-gritty specifics with you, so in real life, what ends up happening, the divorce decree is, again, what both spouses, or now ex-spouses, and their attorneys have agreed to as far as the entire divorce. It's basically the contract of the divorce. You're going to get this, you're going to get that, so on and so forth. The kids, everything is thrown in the divorce decree. But you can't come to my office. If we have a 1K that we're managing, you can't come to my office and say, here's my divorce decree. You got to transfer or give my wife 50%. And trust me, when I'm saying it kind of jokingly, I've had clients do that. They don't know. That's why I wanted to do this topic. When we do have to adhere to it is when we have a Quadro that is actually signed by the judge. I got done going through a real mess with a client, I guess it was about 3 months ago. Longtime client, 25-year client. And he got a divorce, but the Quadro somehow, some way got delayed. And so 20 years later, the ex comes back and goes, "Oh, you remember that Texaco K you had worth of, 400 and some odd $1,000 when we got divorced? Well, it's now worth, 800,000 roughly. And I want half of the 800,000, not half of the 400,000." So they ended up going back to court. They got the Quadro, because I should mention this. The first Quadro, I think it was her attorney screwed up and didn't get the judge's signature. And I'm like, I have never seen this happen. I's are dotted and T's are crossed, because in most cases, it's a lot of money. But her attorney screwed up, didn't do it, came back again 20 plus years later and said, "Oh, we now have the judge's signature, hand over the money." And I won't bore you with all the details. It was an absolute mess. So that divorce decree is going to say how the assets that fall under the ruling of the Quadro are dispersed. Okay, so just keep that in mind. You got two major documents in a divorce: the divorce decree and then the Quadro. So the divorce decree, again, says you are entitled to half of the account, half of the assets. Again, it gets into child support, everything there. A plan administrator, so whether it's let's say it's a K that you're talking about, right? So pick a Fidelity, Vanguard, it doesn't matter who it is, the big boys. They will not distribute those assets, even though the divorce decree says Sally is entitled, based upon the divorce decree, to get 50% of Frank's $500,000 IRA. They go, "No, sorry, can't do that. Show us the Quadro." Well, what's a Quadro? Again, I've seen attorneys forget to get the Quadro. So if you're going through divorce, or you're going to go through divorce, absolutely essential. The Quadro is there and signed by the judge. Again, I've got a lot of Quadros over my career, and they weren't signed by the judge. The attorney just got them, drafted them, both parties signed, and they never gave it to the judge. Again, the financial institution cannot do anything with that Quadro unless it's signed by the judge. So again, what the Quadro does, the plan administrator, again, can't disperse the money without the Quadro. It serves as the key to unlocking the employer-sponsored retirement funds. Its sole purpose, sole purpose, is to tell the plan administrator, the retirement plan administrator, on dividing a pension, etc., between the two former spouses. Now, remember, a Quadro can cover more than one retirement account. It can assign rights to retirement benefits under more than one retirement plan of the same different employers. As such, each plan and the assignment of benefit rights are clearly specified. So what I'm saying here is, you can have a 401k, you could have a profit sharing, you could have all these different elements of a pretty sophisticated cash balance plan, pretty sophisticated retirement plans if you're with an employer that offers those. And that Quadro has to start talking about each and every one of those. I've seen that mistake where the Quadro will only address the 401k, but in the divorce decree, it says you got to split the 401k, you got to split the cash balance plan, which is like a pension plan, so on and so forth. So you got to be very careful about that. Now, here are the type of retirement plans that the Quadros cover. So the defined contribution plan, right? So once again, that's your 401k, your 403b. We don't see many of these anymore. The SAR-SEPs, the SEP IRA plans, simple IRAs. It covers the pensions, what we call defined benefit plans that provide a monthly income, i.e. a pension. And then, as I said, the profit sharings, the employer-sponsored sharing schemes. Now, when I come back, I want to bring something up that I see as a real common mistake, and that is people try to use a Quadro to disperse, or tell us to disperse, 50% of the IRA. They're not used for that. So I want to share that with you when we come back. Let's wrap it up with Kristen Snow. She is in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH, talking about a tough subject, but something that many of you need to be aware of, and that is understanding a Quadro, a qualified domestic relations order. This is, again, how your assets are distributed under law after a divorce. Okay? Very important. A lot of rules that are there. Now, another area that I wanted to inform everybody about is the IRA. Again, I've had clients come to us with the Quadro, which again is designed 100% for employer-sponsored plans. They come to us and say, look at, my ex gets 50% of my IRA. Here's the Quadro. And that is not what a Quadro is for. We cannot process a transfer under a Quadro. That's where many times the divorce decree will be used, or we call it transfer incident to divorce, which is again, just another legal form that says, all right, the IRA with Sanchez gone, 50% belongs to Sally. she's by law entitled to this money. And then we talk to Sally and say, what do you want to do? Do you want us to open up another IRA, et cetera? So that's the difference. So just remember, Quadro is only for your employer sponsor plans. It is not for your IRA accounts. Very important and a very, very common mistake. Here's the other issue. I want to kind of wrap things up since I'm running out of time very quickly. And that is really getting into some of the tax traps and things that are there. But first, before I do that, I want to educate you a little bit on why the Quadros are vital in divorces. So once again, we call this the gray divorce, right? Because you're usually over 50, you're in your peak earning years, your 401k or similar type of retirement plan is usually your biggest asset beside your home. So there's a lot of things to know. Now, why are they vital? Number one, protection of survivor benefits, right? For older couples, the pension, for example, may be the primary source of future income. I see this a lot with first responders, right? They get to retire pretty young and then they end up getting divorced. And, many of them, of course, can retire 50 to 55 with very, very substantial retirements. Well, again, the Quadro is very important because there's a lot of years that pension money is going to be paid out. And again, if the spouse doesn't have the right divorce attorney, the right documents, they could lose out on that survivor benefit there. Now, the tax penalties. This is where it's really interesting. People always think, okay, here's the Quadro. I need to split my IRA. My ex is going to get it. Is she going to get hit, or am I going to get hit with the 10% penalty because we're both under 59 and a half? And the answer is absolutely no. And that's one of the few times that we can take money out of an IRA account for a client that's less than 50 or 59 and a half and not subject the account or the client to a 10% penalty because they're under 59 and a half. How do we do that? It's the Quadro, right? So if the funds are distributed via the Quadro order, that 10% penalty is waived by the IRS. Another reason the Quadro is important, the catch-up potential, right? Again, 55, 60 years old, again, the grain side of things, people reach their peak earning years in many cases. That Quadro is going to ensure that the non-earning spouse receives their fair share of the growth that's happened over decades of the marriage. Or, like I said, the story with one of our clients, divorce happened 20 years ago, Quadro was done 20 years ago. It was never implemented, and what was a $400,000 K turned into about an $8,000 plus 401k. So here's some pitfalls that I want to kind of leave you with very quickly. And that is delaying the filing. So if the employee's spouse retires or dies before the Quadro is finalized, that non-employee spouse may lose their rights to the benefits forever. The language, well, you got to watch that also. Bottom line, have a great attorney. You won't have to worry about this. And a great financial advisor will take care of it all for you. God bless. Have a great afternoon. We'll see you tomorrow on the Jon Sanchez Show.
Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.